Segelas air garam. Inilah trik sederhana yang bisa membantu siapa saja menyingkirkan masalah gula darah tinggi hanya dalam hitungan hari. Mungkin terdengar mustahil, tapi fakta ini diungkapkan langsung oleh dokter. Tifauzia Tiasu
the bottom, now we way up, way up. And I got the baddest bitch, she stays up, stays
Unlock the GoDaddy Aero experience when you purchase a domain from GoDaddy and let AI do the heavy lifting for you. Find a great domain name, build a website, create a logo and more, all fueled by the power of AI. Use GoDaddy Aero to help you build your business online.
that framing and then bringing it in, and as some of those outliers or the extremes of those risks are framed and framed narrower and narrower, that's when you get you get positive sentiment.
When you talk about those extremes, do you also think that the president has set red lines, what he's willing and not willing to do, this idea of a Trump put? Do you think investors have taken that on board?
I think that he's a very smart man, and he's very connected to what's happening in the markets. I don't think that that's the only driver of his decisions, clearly based on what the statements have come from him in the administration. But that being said, we are one of the most powerful economies in the world, and you need to be cognizant of that. But I do think that there's, if you're being objective and independent, you can frame things, I think, and get to a point where you know where the extremes could be, and those extremes have been coming in, and I think that's giving people more comfort to make some of these decisions. I mean, sector trends that are happening in equities, the investments happening, it's happening with people that have the capital to make the investments. It's clear that the need is there. Now, whether it's going to result in the productivity or cost saves, that's going to take more 2, 3, 4 years to see that. So I think for that sector, but then you have an energy investment that's happening, defense, which is, globally that's becoming a thing. So I think if you look at those sectors in the equity markets, people feel comfortable that there are strong fundamentals and technicals, and it gives them the kind of strength and optimism to carry on. I think the bond markets are going to keep, the volatility up, and Brian mentioned it, yesterday. We went through a historical period of low front-end rates that was unprecedented, and I don't think those times are coming back. I think there are people that run certain investment strategies and certain people in the real economy that would really like zero interest rates, and I think that's why you're seeing some of the correction continue in the real estate market, just because interest rates are normalizing higher, and we're going to continue to see, challenges for those industries, and I'm not, highlighting just the real estate industry. If you were a highly levered company and you were used to borrowing short term, that's no longer a viable strategy.
Can we finish at the long end of the curve?
Yes.
Is the character of developed markets, sovereign debt markets, beginning to change? Typically, by definition, when bad things happened in DM, you bought the bonds.
Yes.
You bought treasuries.
Yes.
It just feels like that story's starting to turn. And we have these moments of stress where we see equities and bonds trade in tandem together.
Yes.
It's not just the US, we see it in Europe, we're seeing it in other countries too. What's happening, and how are investors changing?
Well, I mean, you hit it, and that was one of the big concerns, for smart investors that saw that price action, stocks down, bonds down. That's not a good sign for health of the markets from a historical perspective. And with that being said, and with the concerns about the deficit, I still think, the markets are telling me, I think that there's still optimism that there's going to be, a better deficit environment on a go-forward basis. If you think about it, meaning maybe we're going to get growth that's higher than that's projected, and perhaps the deficit, the structural deficit that we have, won't remain as large as what's been feared. If you think about it, the bill was passed, the information's now clearly out there. This is what everybody was worried about, and there hasn't been a significant sell-off. I'm not saying that there hasn't been 10, 15 basis point moves, but people are talking about a 6% long bond as a given, not as a possibility, just months ago. So I do think that the calmer heads are prevailing, and people just want to see this data flow through the system and see this policy flow through the system.
Let's hope it stays that way. Let's do it again soon.
Yes, great. Great to see you. Thanks for having me.
Thank you, sir. Jim DeMar there of Bank of America. The 30-year, not at 6%, of course, today, at 5%, thank goodness. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. President Trump said he's not planning to fire Fed Chair Jay Powell. He made the comments to reporters in the Oval Office following reports that he discussed the idea with a group of Republican lawmakers. The president added, "I don't rule anything out, but I think it's highly unlikely unless he has to leave for fraud," referring, of course, to his recent criticism of the Fed's $2.5 billion renovation plan. Elsewhere, AI spending momentum seems to be holding up as TSMC raised its 2025 revenue growth outlook. It raised its projection after the chipmaker reported a better-than-expected net income, keeping a streak of beating estimates every quarter since 2021. TSMC said that it'll stick with plans to spend up to $42 billion to upgrade and expand capacity this year. And Walmart is cutting hundreds of store support roles. The cuts represent an ongoing effort by the country's biggest employer to make its large workforce more efficient. Earlier this year, Walmart cut corporate jobs and asked some workers to relocate to its headquarters in Arkansas and in California. And that should be my brief, John.
Lizzie, thank you. Up next, the Morning Calls Plus. We'll catch up with Chuck Grom of Gordon Haskett just ahead of retail sales. That data dropping in about 13 minutes' time.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely.
To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
This is the quarter of risk for where the tariffs will start to hit. But the market's already thinking about this as a temporary impact. I'm hoping we get a pullback to some degree. This is what the beginning of a new bull market looks like, right? It's just explosive. It doesn't let people in, right? The rate of change is accelerating beyond what you expected. So it's just, I think the pullbacks will be short and shallow, and I really can't see more than a 5 or 10% correction.
That was Mike Wilson of Morgan Stanley looking for a pullback, and if we get one, he wants to buy it. Got a small pullback this morning, not even 0.1% on the S&P, unchanged on the Nasdaq 100. That's the price action. Let's get you some morning calls. First up, Scotiabank initiating a sector outperform rating on Oracle, seeing it as a top AI infrastructure provider. That stock is up by 0.7%. HSBC starting with a street low price target of 32 on CoreWeave, expecting weak cash flow. And finally, Jefferies cutting Starbucks to underperform, saying the valuation is unwarranted, and seeing a same-store sales slump in the third quarter. Let's stick with the consumer. Retail sales just moments away. 8:30 Eastern Time. Joining us now is Chuck Grom of Gordon Haskett. Chuck, welcome to the program. It's good to catch up as always. Looking ahead to retail sales, I just want to understand from your standpoint, looking at the various companies that fall under your coverage, what's doing well right now and what's struggling?
Yeah, well, you were just talking about rates with your prior guest, and we think the home improvement space is still struggling. You know, there's not been a lot of activity given where interest rates are, and big ticket spending is under a lot of duress right now. So I think home improvement has been soft into the second quarter. We'll get some color on June sales, like you said, in about 10 minutes. I think conversely, this spaces are verticals that have been doing better
are really anything with value. So warehouse clubs have been doing better. Costco, BJ's, the dollar stores have started to improve after a couple of years of being under a lot of duress. So DG, Five Below, Ollie's are all doing better. And then we think companies like Walmart are significantly outperforming Target. So anything with value, we could probably throw an off price there too, are doing better. And like I said, home improvement softer right now.
Chuck, do you see an impact of tariffs just yet?
Great question. No, not yet, but we think we're close. We do a lot of monthly pricing work. We just did it in June, and on average across our group, we're up about 2.5% relative to April. But all the companies we've talked to over the past week think we're going to start to see price increases in about 4 weeks. So right in the thick of back to school is when we're expecting it, and we're expecting to see it throughout the balance of the year. So right now, no, and I think that's why consumers have been holding in. It'll be very interesting to see how we see elasticity in the coming months when prices start to go higher.
When you talk to these businesses and they think that there will be some sort of tariff effect coming down the pipeline, how is it spread across the supply chain?
It's generally like a third of the suppliers are absorbing it. A third, the companies are finding ways to absorb it either through cost cuts or other measures. And then we think about a third will get passed on to the consumer as of right now.
How difficult is it going to be potentially to read this retail sales report? Because there's tons of stories and data about the fact that people were hoarding ahead of the tariffs to want to get ahead of it. Now we're going into the second half of the year. Do you think consumers are just fatigued at this moment?
I think there was a little bit of pre-buying back in March and April. I don't think that's going to probably play into the June report. It might in certain categories like appliances and maybe home furnishings. So to your point, you can't really read into pops in those certain verticals. I think we'll see that a better read probably in August and September on really the true health of the consumer. If you think about June and July for retail, it's kind of like January. They're not very important months. You really don't want to read too much into it. Back to school, obviously the second biggest time of the year after the holidays, is going to be a really important proxy for the group.
And just coming back to tariffs, the president's talking about that he's going to have 10 to 15% rate on 150 countries. He's actively engaged on the biggest trading partners. How important is it for those businesses you talk to that he finalizes rates so they could plan for the remainder of the year in 2026?
Yeah, we were talking with Walmart earlier in the week, and they're talking about how every day they got to go back to the drawing board on what they're going to price and how they're going to execute. I think just knowing what the rules of the engagement is really paramount. I think most companies can deal with what the rates are going to be, but just getting some finalization on that, I think, is very important for all these companies, and they certainly all want it.
Hey, Chuck, appreciate the update. Chuck Grom there.
All right.
I've Gordon Haskett. Thank you, sir. On the retailers, going into retail sales in about 5 minutes' time. Just going back to April. Can't really overstate this, overemphasize the importance of that meeting between the retailers in the White House with the President of the United States.
Basically telling him this is what prices could look like if rates stay at an elevated level. And what Chuck is talking about there is this can all hit consumers back to school. That is politically potent for this White House. They don't want to see families struggle to get their kids back to school when they ran on, we are going to make America more affordable again.
We've said a lot about the bond market pushing back, and the bond market did push back. Equities did too. Corporate America pushed back as well, maybe silently behind closed doors in meetings at the White House, but corporate America pushed back as well. Up next on the programme, breaking retail sales, plus jobless claims and reaction from Francis Donald of RBC. From New York, this is Bloomberg.
brincadeira, brincadeira tem, ó, brincadeira tem, ó. Brincadeira tem, ó, brincadeira tem. Ó, brincadeira tem, ó, brincadeira tem, ó.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Economic data just moments away. We're waiting for retail sales and jobless claims. The scores going into that look like this. Equity futures on the S&P 500 unchanged, on the Nasdaq positive by 0.1% in the bond market. Check out the bond market, 2-year, 10-year, 30-year. At the long end of the curve, a close above 5% for a second consecutive session. This morning, up another basis point. The yield 5.02%. Yields a little bit higher on a 10-year and a 2-year as well. With that economic data, here's Mike McKee. Good morning, Mike.
Good morning, John. Right now we're looking at what's coming in from the rest of the world because we shop. Retail sales up 0.6 on a headline number. Americans and their cash registers. We were expecting only 0.1%, and headline sales had fallen 0.9%. The weakness was supposed to be in cars, but ex-auto were up 0.5%. So not as much weakness in automobiles as thought. Ex-auto and gas up 0.6 compared with 0.1% last month. This is all good news for growth in the second quarter. Jobless claims come in at 221. That's down from 228 last week, so also good news for the economy. Continuing claims, 1,956,000, just up a little bit from 1,954. So we're still seeing people having trouble getting jobs, but it isn't advancing as much as it had been. The Philadelphia Fed jumps 15.9 from -4. I'll check in a moment on the prices paid there. And import prices come in up just 0.1%. So no tariff effect there, but tariffs are not collected on import prices.